Alright guys, this is a really straightforward video because in this video I just want to remind you about two important things that you need to remember with your trading. This isn't a full-blown lesson, these are things that we've covered before on this channel and I'm sure we're going to cover them in a lot more detail again. I also mention it all the time on the forum when I'm looking through people's trades and analysis because it's something, well it's two somethings, that I'm noticing people forget a lot. And of course, when you're new to trading, it's very difficult to remember absolutely everything you need to do. It seems like there's so many things that you need to keep in your mind that one week you remember some things, the next week you forget those things but remember something else. But there are certain things that are more important than others to remember. And I'm noticing with people's analysis, or in particular with their trades, that there's an underlying reason that's causing that trade to not perform how that person expects it to. Now, this video is going to be particularly useful for people that are following the Duomo method, obviously, because it's tying in with our overall approach to trading. And it's also particularly useful for beginners rather than experienced traders. So if you're an experienced trader or you're a profitable trader or whatever, then I'm probably not going to be teaching you anything new here. So by all means, watch it if you want a reminder. It never hurts to be reminded about important things, but I think you might be wasting your time if you watch it just expecting to learn something new. So the first important thing is a really obvious one, but it's something that people forget or just somehow don't pay attention to, which is that you don't have to trade every single level on your chart. You don't have to trade every double confirmation you get. Sometimes it's not the right time to do that. Sometimes it's not the right level to be using in that particular context. Now, of course, when you've got a strategy, it's important that you execute every setup that falls under the rules of that strategy, because it's all a game of probabilities, and if you've got a certain success rate and a certain expectation from your system over the long term, you need to be opening trades to sort of reach that. If you're picking and choosing, you're not really following your system properly, and therefore the probabilities that you found from testing your system are not going to be accurate compared to what you actually end up with. So for example, when we're looking at the Duomo method, it might be the case that you have a double confirmation, but one of your levels are not relevant to what the price is doing right now. It might be what I like to call a legacy level, which is something that's been on your chart from a distant time, long ago, and the price just happens to be sort of coming back and interacting with that level, but it's not necessarily relevant to what the price movements are doing at that moment in time, and that's something that I'm going to explain with a second point in just a moment. Or it might also be that you've got a strong sort of trend against you and these levels are weak ones that are telling you to go against that trend, and you're basically going to be like trying to catch a falling knife with the weakest levels on your chart. Now, if you're in a sideways market, or if there's like a very light trend, or even you're going with the trend, then that weak setup might be fine. But in a situation when it's going against a strong trend, it's probably not going to be fine, and you're probably going to end up with an instant loss, so it's not worth going for. Likewise, there might be situations where the market at that moment in time, whether it's like a completely flat market, all the volume of volatility's dried up, it might be the case that every setup you go for, there's not going to be much potential pips there. The TMP is going to be too low. And in that case, you're going to be wasting so much of the overall expected profit on just the spread that what you're left with is not worth the risk. Of course, your stop loss might be tight because it's a flat market, but if there's some slippage or if things don't move your way, then you might end up with a much bigger loss than what that potential profit might have been. So in a sort of real world situation, the risk reward might be way out of favor for you. So that's the first point, is you don't have to trade every level. And that ties in very closely to the second point, which is focus on the context of the price right now. Focus on the context of the waves that you're focusing on for your trading system. So for example, if we have a look at this Euro US dollar chart, I talk about it time and time again, the structure of the markets. We can see, for example, that there are some bigger waves going on along here, for example. Maybe you count that one, maybe you count this one down to here. These are the bigger waves that are happening. But if you're wanting to trade like intraday, and this is the Euro US dollar 1 hour chart, by the way, if you're wanting to trade intraday, you might be focusing, if you're still using the hourly chart rather than something less, you might be focusing on the much smaller waves. And for example, here, it might be like this that you're looking at. These tiny little waves that are happening over here, for example, these ones. If that's the case, then the first thing that you need to be looking at when you're doing your analysis is what's happening to the price right now. What's happening in this area? If your focus, the start of what you look at is all the way back here, for example, then that's not really tying in with what you're trying to achieve, what you're looking at for your strategy. If I'm looking to sort of find the top or bottom of a wave and to trade that, in the short term and I want to be in a trade like here and out of a trade over here, for example, then it's no good looking at levels that are coming up this way, like from what's happened in the past over here. My focus should be here. Now, this is a good way to find double confirmations. For example, I see a lot of people doing this where, let me get rid of this drawing tool now. So I see a lot of people where you can find anchor points that work and find significant levels that work. So let's say I find this anchor point here and tie up with this one here, and I'm finding touching points along here, and fine. And over here, you can see there's a reversal of that same level. Fine, that's fine. But it's not really tying in with the context of what's happening right now. If you said to someone, oh, I'm going to trade based on this level, and they said, what's the logic behind that? And it's just because you've got anchor points that create that level where there's been touching points in the future. Like, you know, there's been an anchor point here and an anchor point here, and in the future there's been type 1 and type 2 touching points. Yes, that shows there's a significant level of some sort there, but where's the logic behind it? Instead, I want to be looking at, for example, this area here and saying, okay, so we're getting lower highs here until this point here. Now I want to know what's going to happen next. Is it that we've created that higher high compared to this point here, and therefore we're now going to have a higher low and it's going to start moving upwards again? I can see that there's this low point here and there's potentially a higher low there, so it could be the case. If that's the case, then what do I need on my chart to show me whether that's going to be true or false? Now, this is very like a simplified version. Of course, you've got to stick to your strategy. But if I'm looking at it that way, then maybe I need to map out a swing low there. Maybe I don't need other things going on. Or before this point up here, before there was that sort of high, maybe I'm seeing that the price needs to break above this point. When it does, it's broken above there. Now what's next? What's going to potentially slow down this move? Is it going to be a breakout? If it's not going to be a breakout, what levels do I need on my chart? So for example, you might have your swing high with that point there. You know that because it's created this wave and then it's broken out to create another high, then okay, I can start using my Fibonacci levels here. And now you can see you've got a double confirmation if I zoom in with the 1 to 7.2, a little bit of tolerance there, and that swing high from before, and then you've got a short trade there. At this point, you know that once you've entered the trade short there, you know that you now need to be looking at, okay, is it going to create a lower low or is it going to be a higher low, because we've had a higher low before there. So of course you're looking at what happens here. Also at this point in time, you can start to bring in some trend lines and stuff like that, because if this is a wave completion on the larger waves, you can now be looking at what happened further back. So you can start to map out, for example, some touching points along here and start to see, okay, it hasn't got down as low as the waves that have been on the sort of macro scale. So maybe I'm okay for now. I can maybe stay in a trade a little bit longer, see what happens in this area. So basically it's all about the context. I start off with what the most recent waves are and what I'm looking at, and then work my way backwards. So I might have a single confirmation over here and then find one of those random significant levels like I just showed you before that makes it a double confirmation. Because remember, at the end of the day, all the significant levels showing us is that there's going to be some sort of reaction there. There's some sort of heightened activity in that area. It's not saying to us the price is definitely going to reverse there. It's just an obstacle. So if there's an obstacle on the chart, like for example, this swing high up here, that's an obstacle that's going to cause some high activity in the price. And at the same time, you see momentum running out. That shows you that there's weakness in that trend up to there. It's potentially going to be moving down. At that point, if you have other significant levels that are going to show you that, okay, not only is this slowing down now, but there's a big path of resistance there. The price is therefore going to move in my favor. Then that's a good sign. But start off with the context. Of course, I don't exclude what's happening on a macro scale. I don't exclude the bigger movements, but it depends on the context. So for example, if we're moving against a baseline trend line on the sort of bigger waves and we're near that baseline trend line, then forget the context of what's happening at this moment in time around here. I'm going to focus on taking my trades there. But I'm looking at what's happening in that situation now. Here you can see it's a sideways market. It's struggling in that area. It's looking for direction. It's looking for conviction. So therefore you can trade it based on the smaller waves. When it's not, when it's moving like this where it's trending, I'm focused on bigger picture. So you just got to focus on what the context is showing you and not just trade random waves. I don't want to see any more situations where people have levels coming from here, like over on this side, and they're just randomly positioned around here without even thinking about the highs and lows in this area as well. Now, it does sound like I'm ranting as if it's like a big problem, but actually it's something that's very easy to do. For example, it could be as simple as you having legacy levels on your chart, and then the price starts interacting with them again, but because of that, you get distracted and don't focus on what's been happening recently. But if you look at the waves recently and the levels on the recent sort of movements, you can usually find that the price is respecting a particular level there, and that's your entry point. Not your entry point for a trade, but your entry point to start finding that opportunity. That's your in, okay? And then you can start analyzing after that. So I just want you to keep this in mind. I know a lot of you are still going to struggle to keep up this, and I'll still be correcting people on the forum, and that's not a problem. But for those of you that already know about this, take this just as a little reminder, keep it in mind tomorrow, and you'll probably find your analysis much better if you start focusing on what the actual context of the situation is right now. And that goes for fundamentals and everything. Don't rely on previous analysis, focus on what's happening now. But I hope this was helpful for you. I'm sure for some of you it will improve your trading for the rest of this week. I hope so. But if you like this video, then please do hit the thumbs up button. If you've got any questions, comments, leave them below. If you want to know more about our method of trading, there's a link in the description box to join our free Inner Circle mailing list. That way you get access to our free 4-part video mini-series to learn the foundations of our method. And don't forget, of course, to subscribe to the channel for all of our lessons that we have coming out, as well as what we've been doing near daily news videos recently. And we tie in lessons with the news that's coming out. So there's plenty of ways for you to learn. So guys, thanks for watching. I really appreciate it. Take care. See you soon.